Good morning and welcome to today's Trading the Markets Live. We're trading the European Open and today is now Monday the 10th of September 2018. So just before we begin, just to briefly explain what we'll be doing, we'll be looking for some high probability trading opportunities during the European Open. And what we'll do is we're technical traders. We're looking to become masters of price action, so that's truly understanding what price is doing, and we have a methodology that allows us to identify high probability opportunities. Then we go through a bit of a process in terms of our ability to exit those trades. Of course, the trader's ability to identify an opportunity and sort of plan and prepare for that opportunity, which is the execution focus for us. So that entry price and of course how we manage that trade and how we exit these trades will ultimately determine how profitable we'll be when we trade these markets. So it's a coherent approach and we're sure you'll enjoy it very much. So just before we begin then, if we could start with our risk warning, please do familiarize yourselves with the risks involved in trading these financial markets. So the details are there currently up on screen. Okay, so just before we begin, it's important to understand the news flow before we start trading these markets. So what I'm going to do is bring up Forex Factory, which is the website we use to acquire the news flow or have a basic understanding of it. And as we scroll through the day's sort of news events, there's very little of any major importance, I guess, apart from the high impact news at 9:30 impacting the British pound. So it's going to be interesting to see if this is a GDP figure month on month, and it's expected to be 0.2. So it'll be interesting to see that particular figure and see how that impacts the British pound. Apart from that, not an awful lot for us to really concern ourselves with over the course of the trading day. So we'll definitely come back to this at 9:30. So just to get up our trading platform then, I thought what would be useful to do on a Monday is to just conduct a little bit of weekly analysis. So if you look at these charts on a weekly time frame, following on from obviously the weekend, you can see kind of the red lines that you'll see on screen are very much your weekly lows, and the green lines at the top would be last week's weekly high. Now that's just important for help with directional bias, and as you can see we're sort of flirting with the lower with the weekly low as far as the euro dollar is concerned. So a little bit of strength has creeped into the dollar, has pulled back a little bit. So we're looking at these lows now. They're quite important, and you would imagine if we did get this rollover to the downside and some dollar strength starts to creep in, it could give us a high probability opportunity to the downside. So one to watch there for sure. When we go into on the daily time frame, it's exactly as you would expect. So we've actually gapped a little bit lower. As you can see, the close is the actual price of the 15.58 and the open after the weekend is the 15.48. So a 10 pip gap to the downside. However, we've pulled back off the 15.29. That's why we like working with these daily and weekly highs and lows, because it gives you really, hopefully, an interesting picture in terms of what price is doing. So very simply, we're looking for opportunities for this price to break below the 15.29, and if that's the case, we'll be looking to get into the euro dollar to the downside. Very little is happening in the pound dollar. Last week's candlestick was very indecisive in the end. So let's go over to the daily time frame, and you can see we've had a really strong rejection. So again, this price has the potential, and I'm going to take this low in here because you can see how today's price action has bounced off that level as well. So this is the all-important level for us, the 28.96 level, so just below the 2900. If we get a break of that, we'll be looking for this market to continue lower. We'd have a double top, and we'd have a really excuse me, we'd have a really strong rejection of the upside. So again, it's a market that could extend itself to providing us with a decent opportunity. Okay, so looking at the dollar yen on a weekly time frame, you can see we are very much moving sideways. So that is the market condition in which we're trading. So we need to be careful of that when we're trading the dollar yen. We're moving sideways, so if you get into that trade and it continues to move sideways, then you shouldn't be overly surprised by that. Looking at the daily time frame, it's just well, smack bang in the middle of these highs and lows. So really deciding and trading this market at this price, you're just guessing as to whether it's moving higher or lower. From our perspective, just bide your time, wait for those opportunities. So we're getting a bit of a bounce off last week's low. So the Swiss franc actually gapped down just a little bit. If we look at the daily time frame, a very marginal gap to the upside. However, we're getting a little bit of a bounce, just squeezing higher. This has the potential from a price action perspective to be a double bottom. However, the level that's really interesting for us as we look at this market is the 97.66. And a 97.66. So that's the level. Prior to that level, we're likely to still get a rollover to the downside. So things would change if we get a break above this high up here. So no significant opportunity as things stand. Now when we look at the dollar CAD, we've had a really strong bounce off this level in here. It represents as well. There's a bit of support onto Thursday's move. So you can see this sort of support channel kicking in. So clearly moving to the upside, as you can see. So a break of this level in here could give us a good opportunity. It's the weekly high to take this market to the upside of 32.26. I suppose there's issues with NAFTA as well, so that will play itself out, I'm sure. However, there's plenty of scope to the upside when you look at this sort of bullish price action. And continuation of that is what you'd be trading. So looking at the daily time frame, then we're just looking for prices to break above that 32.26, and it could potentially give us a good opportunity. So a couple of opportunities here might be worth certainly looking at. Maybe not so far in today's session. Maybe the euro dollar might squeeze and break those lows. Maybe the pound dollar and also the Aussie dollar would certainly be more urgent, would require our attention. So the Aussie dollar now, you can see we're really looking like we're squeezing below these levels, as you can see on a weekly time frame, and again on a daily, a break below the 17.98 level would give us. We had a really strong explosive move off the back of the non-farm payroll on Friday afternoon, and if we get continuation today, it could present a really good opportunity. The same situation with the New Zealand dollar. So the euro dollar, pound dollar, Aussie and New Zealand all have potential. However, we're not really, and the dollar CAD is not too far away. So there's a hint of dollar strength in this market, but let's see how much follow through there is. Currently below that level, that would be quite interesting for us, the weekly low, as this market trades lower. So we come back to some of these and we'll look at them in a bit more detail shortly. So this is just a weekly overview, just to get a bit of a snapshot in terms of what we're trading and why we're trading it. You can see there's a bit of a support line, just supporting prices, and it looks like this could be another support level. The problem we have with the euro pound is the fact that we're experiencing significant swings and disruptive markets, just often on a fundamental perspective with regards to statements made by EU officials and of course UK officials as well. So a bit of a messy situation, the euro pound, and we are in ultimately a 12-month period of consolidation. That's kind of technically where we're at with the euro pound. Okay, so euro yen, we do have, especially on a weekly time frame, you can see it. We are currently in this little downtrend, certainly since January, and there's the expectation for that to continue. Now we do have a double bottom, so we do need to be a little bit more careful, effectively. However, a break below the 128.02 would constitute a decent opportunity to take this market lower. As you can see, we've already poked below that level and we've reversed pretty quickly. So that's just suggesting to us to exercise a bit of caution. Moving on to the gold market. So we've gapped a little bit lower in line with the dollar gapping to the upside. So there's an expectation for this market to continue rolling over, and if we get a break below the 11.8962 level to the downside, then that represents a really good opportunity to see if we get these prices pushing back down to the 11.61 level down at these lows. So we're already in this market on a daily time frame, so we do expect this market to continue lower, and we'll trade it for as long as that remains the same. And again, a break below this 11.89 number would be a structural failure to the downside as well. So we have our level of resistance preventing prices from pushing higher, and we have a structural failure lower. So again, a really good market to keep a close eye on this week. Looking at the weekly oil market, a strong week, selling week last week, and so far on the open, there's a little bit of a bounce. There's lots of developments with regards to Iran and the US position with the Iranian oil and the impact that is having on the oil market. So it does remain to be seen exactly how these opportunities are going to play themselves out. So expect a little bit of turbulence, I think. So what we like to focus on is the technicals. And as you can see, we're currently below our ascending line. Now that's still quite significant. The weekly high, we've had a strong week last week. A strong negative week last week, and a break below the 67.05 would create a bit of a double top trade, maybe down to the $64 level again. So let's see. We're either going to break above the 71.64, which would obviously be then pretty bullish at that point, and the 67.05 to the downside. And while we're in this sort of mid-range, it doesn't represent the high probability just yet. Just UK oil on the daily time frame, we're getting that sort of bullish sentiment just off the pullback back to this low. Strong rejection Thursday and Friday, and a gap to the upside on in today's trading. So interesting. S&P 500, a little bit of a bounce really off Friday's low. So let's see how much traction that can have. Slightly different picture in the Dow Jones, as in we've been moving sideways for over a week now. And the Nasdaq, really strong pullback to indecision, and maybe there's an opportunity for this market to squeeze higher above Friday's high, and you can see it is an important level. The 74.90 level, get a break above that might give us an opportunity to take that higher. The FTSE market, as you can see, is kind of a bearish outlook, isn't it? We've got our constructive break of this level. We're bouncing now back. This weekly low, the 72.26, is a strong level. recently. So it's likely to provide a little bit of resistance, actually, these lows. So if we get a break of this low, it would give a good high probability opportunity to push lower. Similar situation with the Euro stocks. This level in here is quite an important level. There's probably another level just below it. So a break of these two levels in here would give us a really strong push lower. So that's the Euro stock. So that's just a kind of more of an overview, or a weekly overview. So now we're left with deciding which markets we should look to trade. So this is a part of our trade plan. So without further ado, let's identify those opportunities. So right now, we do like this market below the 15.29, but right now it's not really giving us a fantastic opportunity. So we will definitely look for other opportunities elsewhere. We do like the 28.96. We're currently trading above that level. We've got the news out at 9:30, so let's see if we come back to this market very shortly. Dollar yen currently between these two levels. Dollar Swiss threatening like it's going to sort of bounce off these lows, but it just remains to be seen when we'll get that move or not. Dollar CAD still kind of 30 pips away from breaking that high, so we'll continue to monitor this. So the Aussie dollar is kind of primed. We're kind of at that low right now, so that might give us our first high probability opportunity. The New Zealand dollar might give us the next one. So I'm currently bouncing back. So we had the move lower, we had the bounce back to resistance, and now we're toying with the potential for this market to continue lower. So we should wait and see. We'll come back to that one. Not really liking the euro pound market, just because of the fundamental moves we've been experiencing in this market. The euro yen just being held up at this level. We do like the idea of this market lower. What I'm going to do is just add just a pound yen just to compare and contrast. So let me see. Right, there we go. So let's put in this new chart. So I'm just going to position it in the normal place. So we're just going to slide this across. Just in here. Okay, so just because we brought up a new chart, we can conduct some analysis on this market. So it's important to zoom out. What we're going to do is just change this color, so you can see the process that we adopt when we work with support and resistance. So we want to take the significant highs and significant lows in these markets. As you can see, we don't need to be too accurate, but if you take note of these levels, it does make it certainly an interesting discussion to see how price behaves around those levels. So so now what we have is more shorter term time frame, so we'll change this. This is more of an intraday level now. So we want to see where this market, breaks from and then pulls back to. Obviously, we've had a break a little bit higher, of course. In fact, that's quite a significant move actually in one day. And then you get this little rollover, bit of price action to the downside. But Friday's action very much indecisive. It's like a long-legged doji candlestick to the downside. And today's price action is not really giving us much to work with. However, a bearish, I think it's important to just add these levels in here. So there's clearly kind of a downside sort of push as things currently stand. So we'd expect this market to continue lower. We obviously don't really have an opportunity to do anything with it right now, so that's worth keeping an eye on. This is a much sort of easier trade to kind of work with. So you can see they're at different stages. A little bit of dollar strength off the back of the non-farm payroll. Let's take a look at this market as well. It's going to be a little bit on the choppy side, but we'll have a look at it. And we're still $4 away from breaking this low in the gold market, but again, we'll just prepare ourselves for that move if we get it. US oil could give us a little bit of a bounce off those lows. So we're just going to review some of these remaining markets as the morning unfolds. The FTSE looks like it's interested in moving lower. Okay, so so let's work with these four markets then for now. So we'll just break these down. So we'll stick. This is our trade plan that we're just putting up on screen now. We put the gold market bottom right. We put the Euro yen top right. Let's stick the Aussie dollar bottom left. And it's the New Zealand. I'll tell you what we'll do. We'll stick the Aussie dollar top left. Okay, so this is our trade plan for the session, just based on multi-time frame analysis and our understanding of what price action is currently doing. Now, of course, we need to make some decisions in terms of, right, well, how do we trade each of these markets? We've identified the markets. Now we need to sort of plan for execution, and that is really what we're doing. We're planning for those opportunities to arrive. So we're going into smaller time frames. And it's quite straightforward, this one for us. We're looking to trade with the trend, so we're looking for opportunities to sell, and clearly a break below the 1798 would give us that high probability opportunity to the downside. So this is a little bit of a no-brainer trade for us to the downside if we get that break, and we'll keep an eye on the 1798. So let's see how that compares and contrasts to the New Zealand dollar. We've had a bit of a break and we've had a pullback to that level. So on an intraday level, let's just take that high. There's a bit of a band here just regarding in around the weekly low. So a little bit of a difficult one. And we'll take this low in here. So if we get a turnaround, it could be worth looking to sell at this level, but we've got to break these lows at 65.19, and it's only 6 pips away from the current price. So what might be a better trade is if we flush through the 67.12 level to the downside. We could certainly use the 65.30 as our stop loss, and there might be opportunities to get into it earlier. It's just that the chances of a successful outcome are a little bit more reduced. So really the high probability trade as things stand would be the 65.12. So it might just be worth waiting for that opportunity to reveal itself. So euro yen next. Let's zoom out and see where we're at. So a little bit of a downtrend as of recently towards the end of August. So that's what effectively would be actively trading. So looking to go with the market as always. We can identify these levels to the downside. You see, we have our directional bias, and that is very much to the downside. So we know what we're looking to do with this market. It's just as we look at it, we're not sure if we're going to get that opportunity to any great extent. Now, this is the low here, and we've had a really strong flush to the downside and a really strong pullback to this level. So that just represents a kind of a rejection to the downside. So you can see we've got a break of the weekly low to 128.02. We are, as things stand, just running into this level in here, as you can see. So trading in this to the downside is kind of the direction in which we should be looking to trade this market. We've just experienced a little bit of an uncomfortable pullback. So let's look at this market a little bit more carefully. It's a really strong pullback, isn't it? So just what we could experience is if we get a bit of a turnaround at this price up here, it could give us an opportunity to obviously get into it at a higher price. There's reluctancy for this market to move lower, isn't there? Okay, let's continue to look at this on a 1 minute time frame. So what we'd be looking for with this market would be a structural failure which creates a bit of a low like we've got in here, somewhere around there, creating a lower high, and then if we got the flush below that level, that could be our trade if we get an opportunity like that. So that could be our trade back to the downside. So right now, just a little bit of patience, and then that will give us hopefully an opportunity to get into this market. So just a really strong pullback, isn't it, off the lows. Okay, finally, we've just got the gold market. So the high probability trade is a break below the 11.89 to the downside. So as long as that remains intact, we'll be looking for that. It doesn't look like we're going to be getting there anytime soon. So again, just a little bit of patience are required. So we're still a little bit off this low, and the more recent price action as well has been very choppy over the course of the Asian session, attempting to push lower, pulling back, and now we're just pushing at these highs again. So from an intraday basis, there's a kind of a level in there of resistance, and we're just straddling it now as we speak. So so let's see how this market performs in and around this level. But in terms of our directional bias, we're looking for this market to sell off. So we've got our trade plan. If this market starts to conform with our expectations, then it might give us a good opportunity to sell it. So what are we looking to do this morning? We've cherry picked some of these opportunities, and don't be surprised if we get a little bit of a slow morning. However, a break below the Aussie dollar, below the 70.98 would give us a high probability opportunity to the downside. So we're only 10 pips away from that. Same situation, but sort of slightly different setup. The 65.12 is the high probability in the New Zealand dollar, to see if we get continuation. And this market is looking like it's heading the wrong direction. So big question mark over the euro yen. And just regarding the gold market, let's see if we can bring this level up. So we've got a strong directional bias to the downside, but it is below the 11.89 level. That's the level we'd be looking at. So the only market that we've got concerns about in terms of a directional bias would be the pound yen. Sorry, the euro yen, should I say, excuse me. So what this currently represents now is just kind of a really strong pullback in this market, which had been strong. The yen had been strong, seeing the euro yen push lower, and now a lot of that has retraced. Just probably in the last hour or so. So not a massive reversal, but a significant one. I suppose from a pip perspective, we're talking about 40 pips. So it is quite significant, but it's pretty linear. So at what point does this make another move lower? And that's what we need to gauge. So if we could reject these highs and create a bit of a structural failure to the downside, which is the market attempting lower, failing to make a new high, and then flushing to the downside, something like that, making a double top or something, might give us a better probability trade to the downside. But we'll just have to wait and see on this one. So let's see how these markets play out. We do want these markets to move as per expectation. So we've got our trade plan. We're now just waiting for the trade opportunities to present themselves. So if any of you guys have any trade ideas that you're interested in looking at, or you have any comments to make, feel free to post them into your chat box. We'd be more than happy to spend a bit of time doing that. Because what we're going to need to do now is to just exercise a bit of caution. A lot of our time is obviously spent waiting for the opportunities to occur, planning the trades, waiting for those opportunities to fit in with our analysis and our understanding of what's happening with those markets and trading those conditions. So that's what we certainly perceive to be, in terms of very important decision-making skills that need to be developed, and having a plan that you can stick to in a very real, sort of tangible, meaningful way. And this is how we go about it. So we've conducted a little bit of multi-time frame analysis earlier this morning, just looking at weekly time frames, and you can see the importance of the red lines on screen represent weekly lows. So if you get rollovers to the downside, not only will you see intraday traders trading these markets to the downside, but you'll also have daily traders and weekly traders, people that take more longer term positions, potentially adding to the market. So we're likely to get explosive moves off those levels. So so they are worth waiting for. And just to clarify, we're not interested in buying. We're not interested in buying those trades, because the weight of this market is very much to the downside. So at some point we're going to run into a lot of resistance. So these markets are very much tipping that way. So this trade here it's the smaller of two trades. So we're not really interested in the buy trade, so to speak. Hello, Michelle. So you think the euro dollar is currently doing, the B to C move of the Elliott wave? Yeah, you could be right. What time frame are you looking at, Michelle? Do you mind me asking? So what I'll do is I'll just take some of these off the screen, just to show really that we're not interested in trading every move all the time. You know, there's some like structural failure to the upside. It is a tradable potential opportunity, but like I said, it's going to run into resistance, and that can become a bit of a problem for us. So let's have a look at that, Michelle, now, and we'll see. Yeah, I see. So you're looking at it on a 4 hour. So the Elliott wave obviously just identifies wave-like patterns, and we do have a little bit of from a technical perspective as well, there's a bit of downward moving momentum in this market as well. So when we look at this, where is my... So when we look at this, there's downward pressure just being applied on the euro dollar. So just fitting in with your analysis, you're absolutely right. So this is the C leg of the move, if I understand the Elliott. So we're getting the bounce off the resistance. We're getting to the pullback is quite easy to see, and now we're just focusing on the extended move to the downside. So it's moving in that kind of fashion. And I suppose what we refer to this as potentially a structural failure as well, Michelle. So we're interested in this market breaking below the weekly low, and as you can see, even on a 4-hour chart, we've failed to make a new high, and then we get that flush lower. But like this rejection here is quite interesting, like we've seen before. So we saw a significant pullback before. So just err on the side of caution really with it, which is kind of why we're just stepping back. We will be looking at selling the euro dollar. So but obviously we need the market to kind of roll over to the downside. So if we just even get a little impulse, I mean, this would add a significant amount of downward pressure, and it makes that level even more important when we look to trade that to the downside. So the weekly low is the level to really focus on, and that's what we'll be doing. We'll be looking to trade a break of this level. And of course you can see that sort of Elliott move potentially play out on a daily time frame as well. We're just getting a bit of a bounce off that 1529. From the lowest point of 113. Okay, so this is your B level to see, is it? And then you're expecting. Are you expecting this market to flush lower or flush higher, Michelle? Sorry, bear with me a second. Yeah. Okay, Michelle. So, yeah. Okay. So you're looking at this level. Where would it be? So you're looking at this level in here. So this would be the first wave, effectively, to the upside, if I understand you correctly. You can also see a head and shoulders reversal pattern. So So let's go back to the 4-hour chart. So I wonder if I could just ask you, is this your so you're saying you're looking for this market to push higher, and I can't, you know, there's no need for me to disagree with you. This could be a double bottom. I don't know if that's your head and shoulders that you're looking for, but that would coincide with a weekly break above our 1659 levels. So that's when it would be for us a little bit more game on to the upside. Yeah, a viable trade to sort of buy these levels, if that's what you're in this trade for, is obviously a short-term move to the upside. You've got a clearly defined stop loss on this market. The only problem is what we're looking for is not necessarily the bounce, but we're looking for actually the break to the downside. So we're just looking to go with our analysis. This is what we would like to see in order to trade. Looking to get into this market to the downside. But I appreciate it does absolutely have a bit of a wave formation to the upside as well. And I suppose that is the beauty of technical analysis, that people use and identify different opportunities using different techniques, and all of it is valid. Let's say there's a couple of hundred successful ways to trade these markets. It's just cherry picking the approach that is conducive to your style, your personality, and your time availability, and of course your approach to risk. Now, within all of that, there's very, very important skills based around consistency, discipline, and patience. It doesn't matter what your approach is. You know, you can't always trade whatever setup you're looking for. You have to sort of wait for it. And if you're consistent in looking for those types of opportunities, and you can apply a bit of discipline with regards to protecting your capital, then all of a sudden you're building the ability to navigate these markets effectively, and that's the skill to trading. That's what it's all about. So yeah, good shout. And you're seeing head and shoulders on a daily time frame, so let's have a quick look at that. So would I be right in saying then, Michelle, is this your head down here to the downside, and that's sort of one shoulder, and are you saying that this is kind of the other shoulder? So obviously a breakout above these levels would be a complete, really strong reversal. Is this what you're identifying as a head and shoulders? Because what we like to see from a clear-cut head and shoulders is the element of symmetry. So that's when you obviously get the move to the downside, and the market starts to the market starts to sort of create this bit of a shoulder in here, as you can see, and a really nice, clearly defined head. And of course, these levels in here become major opportunities to take this market to the upside from a head and shoulders perspective. So if this is your head down here, we would just need to see a little bit more symmetry. So what we would like to see is, I'll try and reflect kind of what's happening a little bit more. So something like that would be a really strong head and shoulders, where if you get a break of this level up here, then you are seriously off to the upside. And I'm sure traders all around the world, so that's what I'm trying to replicate, is kind of what's going on over here. And if we get a strong replication, then traders everywhere will be looking at this level and saying it's game over to the downside as far as the dollar's concerned. This is your head and shoulders. This is your really strong sort of shoulder pattern replicated on both sides with a certain degree of symmetry. you know, sitting in these levels. So symmetry is quite important with head and shoulders, just because you're not adapting, I suppose, the price action to suit. You kind of want it to be clear cut, and the more clear cut it is, the more people will be trading it in that direction, the more volatility you'll see, and what it would imply for the euro dollar is game over to the downside as far as the dollar is concerned. Yeah, no problem. That's exactly what we're here for, Michelle. So no problem whatsoever. I can't really disagree with anything you said. The only thing I'd like to see a little bit more from a head and shoulders perspective is just more symmetry. I'd like to see the right hand side of this screen just play out like we've seen on the left hand side. And if that plays out, if this market moves sideways for what is it, month and a half, maybe 2 months, if that's what we see, then you can imagine anytime you turn on the television and you're looking at or you're listening to technical traders, they'll all be talking about the potential same pattern. So that should help you. Okay, so let's see how these trades are performing. So this is effectively a bit of a structural failure to the upside. We're closing above the 71.16 level to the upside in the Aussie dollar. The same situation for the New Zealand dollar. So we're getting a bit of dollar weakness creeping in. The gold market is just bouncing back to the upside. So a little bit of a messy picture on a number of different markets at the moment. So the potential for the upside, a bit of an upside move, doesn't really bode well for the euro yen. Whereas a break below the weekly low, the 15.29, would represent a great opportunity for the euro yen. So maybe because of that reason, we can remove that from our thinking. So again, these are the levels we're looking for. The problem with this trade now is kind of the European strength really that we're seeing. So although we might get an opportunity to take this market lower at a level of resistance, you know, do we get some more strength coming into the euro? I suppose the likelihood is increasing every second. Okay, so those are the opportunities we're going to look at. We're going to, I do apologize guys, but we need to finish up this live broadcast through our YouTube channel. We are switching across to the live trade room for our members. If you would like to join us guys, we're currently offering a 14-day free trial, so you can join us here at the live trade room, access effectively over 76 webinars a month. Also there's a lot of education and a lot of content in there as well, and completely free of charge, no contract, no obligation of any kind, just a 14-day free trial. So click on the link below if you'd like to join us, and I'm afraid we're going to switch across now to the live trade room, so you could get instant access if you want to join us straight away. So So on that note, guys, we're going to be looking at these trades, but we'll have a look at them in a little bit more detail when we switch across. And the other thing as well is we'll have a look at, see those other opportunities in those other markets, see if anything is developing across the board, and we shall have a look through those markets now very shortly. So on that note, guys, thank you very much as always for joining us. Hopefully you can join us again next time. We're currently back on live at 1 p.m. To trade the US Open, so hopefully you can join us for that. Hopefully the markets will liven up just a little bit, and you can also connect with us through Facebook, Instagram, Twitter and LinkedIn. The details are there up on screen. So thank you very much for joining us. As always, do take care, and from everyone here at the Live Trade Room, we'll speak to you soon. Bye for now.